Hello and welcome to the Friday wrap up brought to you by David Gokhstein and the Gokhstein News Network. I'm your host, Landy, and today is February 6th, 2026. And we're looking at Bitcoin here on the weekly, and it's essentially the same chart that we were looking at on Wednesday. Um, and it was all about macro structure, right? In particular, the higher term time frame structure on the monthly, where we have broken the uptrend. Thus, we are in a bear market. And a lot of people now are saying, wow, look at the buyback. Um, the buyback means that there's going to be, this is the low. That's not necessarily the case. I've also seen like narratives of this move is too fast. It's never happened before. It certainly has in less time as well in terms of the magnitude of the move. Just last cycle off of the major areas of interest back here. And we had a much larger, faster move. Now, coming off of a high and then breaking structure, it's exactly what we saw over here. This move from the lower high to the initial low around 17,000 also got people very excited. This is where we dipped below the 200 EMA, and it didn't quite get the buyback that we're seeing. Well, I guess it did actually. It did get quite a buyback, but regardless, in this case, it knifed through. It played out one of our scenarios. So we'll just kind of start with this. Targets essentially initially hit to the downside here. Right now, I was a little more biased towards, and we can turn this fib off here. I was, and now obviously this is no longer in play. Where was, I think it was this here. Yeah, so this has shifted a little bit, but the lower second standard deviation was kind of where I was looking 68 to 72 around the lower second. EMA 200 or 200 EMA, the 200 period exponential moving average on the weekly here. And I noted that, I was more biased towards a bounce there. And, if we go to the daily here, we got a little bit of a front run bounce there on the dailies around 72 and then dipping into, 71.7. And from the weekly time frame, I was a little bit more biased to a bounce there. But on Wednesday, where I kind of wrapped both the Macro Monday video and the Wednesday check-in all into one, I noted that if it drops through, the next major areas to pay attention to even, we're going to be, this high side structure between 65 and right around 66, 550. But if that's lost, we're looking to essentially $58,000. Now, I previously have been talking about you can use it like a zone, 58 to 60. We ended up hitting 60. And, if we get back below the 200 period moving average, I'm still looking right back down here to this low at $58,000. That is where the 200 period simple moving average is. Now, if we close anywhere above the 200 period exponential moving average, yeah, we will see this head up, as well as see the 377 EMA here as well head up, and that we're at the same time going to see the lower second standard deviation move down. Now we are right around it, and closes are what matter for continuation. This was a big move down, nearly hitting $58,000, and it played out one of the scenarios that I posited on Wednesday, and that is if we lose that 68 to 72 area, specifically obviously $68,000, then we could see a knife through. We have seen that in the past, and that's exactly what we have now seen again. So this very likely is going to be a move that gets maybe a little bit more mean reversion on the daily. I'm going to show you the daily here in just a minute. But again, we have to be aware of structure. And what is the structure? It's a downtrend right now. And that downtrend is a pretty strong one at the moment. So last lower high is right here at $98,000. And then, of course, we have a lower low now right at $60,001, right? The only way that this changes, and this is where things would change, right? If it closes above the lower second and that 200 period EMA, where would this change? If it tries to bounce further and specifically closes like above this week's high, just below $80,000 at 79,339 here. Well, where would it change? It would change at $98,000. That would be a downtrend break, right? And that's where, we could look for substantially higher prices, but it's still in a bearish setup. What we would need to see play out from there would be, would be different, right? We would need to see, something, and this is just an example, come back down in higher low, equal low fashion, and then try to come back up. And something like that would happen, if something like that were to happen, rather, or a move like that is playing out, what happens to the bands? They go from expansion back into compression. You look for the higher low, equal low structure, whether it's a higher low or an equal low as it relates to the last low. In a compression, then you look for the expansion back to the highs and then a breakout and above. That would be the most bullish of bull scenarios. And, I've mentioned that is something that you do have to entertain because of the monthly compression, right? The monthly compression at the highs here, I do think unless we break down from below right around the lower second standard deviation at $55,000, which would signal that we're going to go significantly lower towards that, mid 40s to 48,000. So between 48 rather and 55 here would be a big area to pay attention to. And I've noted this a few times over. If we get continuation to the downside, is beware of where that lower second standard deviation is. It's a 50-period moving average as well on the monthly time frame. If this, didn't end up being a major low that can get a structure break, which, to be quite honest, most rallies from here are going to probably be sellers rallies. So I don't have that much confidence in it being a structural change coming up anytime soon. But, we'll take a look at the possibilities. I do think it's going to take time. And I think that with this sharp move down, we need to see structure form on the daily, and that's, pretty far away from doing so at this particular moment, and then structure form on the weekly. But that lower second standard deviation, if we got any closes on the monthly below there, we've either already gotten down to, between that 55 and 48, and anywhere below there, we're looking at the mid 40s, probably. You could even rope in the lower third here at 38 to 44 as being viable areas, but those will update as we get closures on the monthly. But this is still pretty early in the month of February. So, I think those are areas that you should note on your chart. Again, to the downside, if we do see continuation, we are now below the lower first standard deviation, which is right around $72,500, $72,000 area, depending on your chart. It's going to be right around there within a $500 band between 72 and 72,500. And as long as it's below here from a volatility standpoint, it is more biased to come down and test where that weekly 200 is, that's confluent with the monthly 50 and the lower second standard deviation, which is around $55,000. And then if it does start to lose that, that's where we have to then entertain that 48,000. Anywhere below there, 100-period moving average on the monthly at, mid 40s, 44 to 45, and under down to $38,000 would be fair game. And I want you to note something, 38,000 to 38,500 or so. This is on Coinbase. Yeah. This is, 37,600 and then 38.5 essentially between this, this low that was being attempted here, because this was a close open structure. This is not actually a structural closing low, because it did not close above either the swing or the open of the bearish candle. So it didn't close above the swing of the bull candle here. But this candle here in February of 22 did set this swing low at the $33,000 level, but we didn't see a close above its swing high, and we didn't see a close above the bearish candle open there at 46,200 or so. But this is a close open that is an important area to pay attention to. If I just snap a line here, you'll see that that we have the after breaking into a bull market. So we come off the lows here, we make a lower high, and then we got the higher low, right? Coming off of right around $25,000. We broke the lower high, so now we're in trend reversal setup, getting set up for the bull market. The trend has changed with that higher low, and thus anywhere, after the higher low is set, it broke the lower high. So you have a trend reversal to a trend break setup. That is the bullish setup. Where'd it go in November of 23? Well, it directly swung 38.5 on that wick right there. But if you look at the close open, right there where the lower third is, right around $37,000, $38,000. This is 38.5. You can call this 38, I guess. This would be an important area to the downside on continuation. And, these are all right? Ifs, right? This is all based on, at this particular moment, the structure that we have on the weekly, right? And the band setup on the monthly. And the invalidation of continuation would be setting a low, like right here, right now, at that $60,000, and then closing the weekly above 98. That would be a structure change back to the upside. But that's, something that, it still needs to be considered. This is an on-chain major event, as well as, I know that many aren't looking on-chain. They're looking in all the derivatives markets and the OI wipeout, all these different, MVRV scores and like all this different stuff. I will say I think it's going to take a while to set an actual macro low. And I do think that there's sellers rallies and it's more biased towards the downside. I've mentioned this a few times. Whether we, didn't pass the 68 to 72 area and take out some of the further downside targets that we talked about doesn't really matter. I think after a move like this, we need to see price settle down and we need to see volatility come down. But we're going to save this. And this is going to be good for a little bit. We'll update it as we get the weekly closes. But one of the big things here is looking back to this weekly, right? I told you that essentially, when this trend reversal setup confirmed back in mid to late January, that was the significant data point that we needed, right, to formulate what we believe is going to happen next. And it's all contingent on continuation below 80,500, right? Then you're looking to the mid 70s, and then low 70s, and then mid 60s, and then low 60s to upper 50s, right? Nearly got there all in one shot. Talked about it on Wednesday, and it's still viable in terms of downside structure. So understand that just because the buyback is very strong on the Friday candle does not mean that this move is over. And the telltale sign that we know this move is not over is that we are still in an expansive posture on the weekly here, and we're still in an expansive posture on the daily. All right, I don't have the shorter term EMAs or MAs turned on right now, but we're below all major moving averages on the daily. We're below all major moving averages, not all of them. I mean, one of the major moving averages we did get below in the 200 EMA, but we're below most, bull market moving averages on the weekly as well. And we're coming into some of those supportive moving averages on the monthlies. So like when looking at that, we just hit the 55 EMA and swung through it a little bit. And then the next one down there is the 50 SMA. right? And that's going to be your, anywhere between, again, 50 SMAs around 58. And then you get to 55 below there. And that's where, potentially more, right, that we've talked about on the weekly. If we do see that this is going to be a continuation of trend, either in this same move, that's confluent with some of the areas that we've talked about. We've got the SMA here at 58. We've got the lower third now down at 55. And then just below there, the 377 at 48. And this is very closely rhyming with some of the areas of interest that we have over here on the monthly with the lower second at 55. Anywhere below there, I would still consider, 48, because we've got $48,000 as a lower high that started or kicked off the bear market over here in 22, right? So that would be an area that you'd want to see hold up as support. Of course, we did test in and around there, in this move to that failed to actually close above, but did swing above that 48, 240 or so. When the ETFs launched, and then it was even retested back here post ETF launch and after the new all-time high prior to halving. So this is a broken uptrend. So structure has changed on the monthly. Be aware of, really significant rallies on the weekly. This is something like, let's say it does set a weekly low and it rallies up. It can rally up even to make higher high structure and change things on the weekly, up to the upper first, or, and then come back down for more. It can even go to the basis. It's fair game. That's around 90. That's the last daily, right around the last daily lower high at 90,500, and then come down. The only way that it changes is if it goes significantly higher and then, comes down for higher lows and then comes back up. And this would still take time, right? This would be a shallow bear market if it did it like this and then come back up. What would that look like on the weekly? Well, that would look like coming up to take out the weekly lower high, right, at 98,000, right? And that's a big, big area, right? That is the rejection of this uptrending higher low right here, right, with this lower high. If we did see something like, hey, this is a massive rally off the lows here, and it breaks back above the 100 EMA at 85 to 86, which is also, again, that's a weekly area right here. Then we'd have to consider, like, hey, if it does get a structure change on the weekly by getting above $98,000, so say it gets all the way through, this is just a theory or an example, not necessarily what I think is going to happen. We're going to watch price. It's going to tell us what's going to happen. But this would be the scenario where it would still take quite some time, rally up, get a higher high and then higher low, and then move on to higher highs. That would also cause the compression, much like what I've posited earlier. Or it can still rally up and then come back down. It can rally up even to 84 to 86 here, or anywhere in between that 86, and then come right back down into, a further downside move, right? So that's where, we would be looking for then, a more local structure change, right? But it could rally up even into this area, anywhere between 86 to 98 and not do anything. It's still just, it'd be a rejection and continuation lower likely. So that's kind of the different scenarios. Let me draw it out a little bit more clearly. Saying that we, let's just say, just for examples purposes, that this is a local low, ends up becoming a lower low on the weekly, and it rallies up into this zone and rejects and comes back down. That's your bearish scenario for continuation to lower prices. That can happen anywhere in that zone, 86 to 98. Doesn't change structure. It can come in even lower highs in the 70s. maybe even lower, right? Get a local lower high, like really local, right? But let's say it rallies up and then gets continuation down. That's where we could potentially see those lower prices. The way that it would change is if it were to rally straight back up and then come back down for higher low equal low structure, right? So it's either continuation and or break that lower high at 98. Now let's look at a few other things. So I've pretty much covered where continuation would go. Below, this low and back below the 200 period moving average around $68,000. I'm targeting the initially just below this low at 58,255. That is confluent with the areas of interest on the monthly as well that I just showed, right? Anywhere below there, I'm looking 48. If we do see 48 fall apart, right, that's that right around $49,000 ETF high, lower high from the ETFs, higher low as it relates to macro structure for the monthly here. But obviously this was a lower low in the context of this downtrend. But on the monthly, this was a higher low at 49. And then also this was the bear market lower high over here, right around 48. But if we do drop that, then we have to consider moves to 38 to 44 as a potential that I just showed a little bit ago here. So that's pretty much Bitcoin in a nutshell for the longer term time frames. Let's go ahead and take a look at the shorter term time frames like the daily. So the daily right now, let's go ahead and take this off here and let's just track this structure, and this is going to be based on a weekly. So let me go ahead and pull up our weekly zone 2 structure here. And we have the mapping of the weekly here. All right, so what do we have? This is all weekly levels. So we've got this high, which we have this high here on a close being the lower bound of this top side structure here. That's coming in at $68,000. Okay. We have the next lower high on a close at 69,600 or so. We then have the next close at 71,300 or so, and then we have the 73,835 high. All the swings in between are areas of interest, but we're tracking the closes as a zone. So basically 68,000 to 73,835. Below there, we've got this bit of a lower high swing topside structure here at 65.6. We've got the swing here at 65. This was another lower high. It was a higher low to lower high on a close as well because of where it closed on this candle down here that set the low, turned around and made a lower low, higher high, higher low swing to then higher highs. But essentially moving down, we've got 64,250 to 65 essentially. Then we've got the low side structure here. Some of you might remember this. We've got this higher low at 62.8. We've got this higher low close at 61.5. And then we've got that swing at 58 before getting to these lows here at 55. We've got 54.5 with the swing, in this case, higher low as it relates to this lower low, but at 52.5. And then we have the $49,000 wick there. So I just wanted to kind of walk through the mapping because we are now playing in this zone on the daily. I'll turn on the zones overhead, but I just kind of wanted to show you on the daily here. Bitcoin settled and closed on the daily right here on one of those weeklies at 62.8 or so. And it did swing down in and hit $60,000. Now, after rallying through 65 and 66,550 or so, it reclaimed the bottom side here at 68 and is now settling in around the 69,500 area, prior all-time high zone, to around that 71.3, 71.4. If it can get back above 73,835. Well, that's where we have to start looking towards those overhead areas of interest. Tight zones here, a little bit of a gap between the weeklies, swings and closes, as we did get a front run at that 74,420.69 on spot. But you can see it's got a lot of overhead resistance to deal with, right? So right where it was trying to find support, where that monthly higher low was at the 74.4 region, it swung through into the top side structure of the weekly below, broke below it, and then skated right through levels as liquidity was really thin and there was liquidation cascades going on. But settled right in the bottom side of the weekly structure over here. So we got weekly structure over here. And then if it was to drop, then we're looking to the next bigger weekly structure of the lows. So is there daily areas of interest in between? You bet there is. And I'm going to turn this off in just a moment, but let's go down to the hourly time frame, and I just want to show you how clean this is between these weekly structures. So when we started to lose the 83.5 to 84.7 area up here, after losing the big weekly at 86, you see it tried to hold as support, came down, tried to play around the daily zone, dropped down to the weekly at 80. Then it dropped into the 78 area, tried to find support here, dropped down the next level, the mid 70s, tried to hold in and around this area before coming down to 74.4 or so, 74.5 in this case, tried to rally up, failed, and then the next weekly, rejection, down, rejection, down, rejection, down, big rejection, and then down, nice close open, by the way, right here on 68. And then right down into the next level, 66 to 65. And then you see how it's just perfectly playing the weeklies for liquidity, and then nice dip in, and then right back to the top side here. Now we're just mean reverting here on the hourly. It's just the weeklies are so clean, so powerful in terms of their importance when tracking how people are placing their orders on the order book. Even the hourly just plays them so beautifully. I've said this before, despite the large move, you're tracking it on lower term time frames. You can see where people are putting their orders on the order book, and it's really clean with the weeklies. I think Bitcoin is one of the cleanest trading assets on the planet in that regard. Now, let's go ahead and talk about a few things here. What are we looking at with Bitcoin? Well, actually, I had some of these areas here, didn't I? Yeah. The other big thing is I'm gonna show the fib here in a second, but 58,350 or so is a major fib level as well. But let's go to the daily. Let's turn on the Landy bands here. And let's look at how aggressive this move is. It's a very aggressive expansion to the downside. This is going to take a while to work itself out because it's still an expansion phase. Even just mean reverting as the basis is headed down. We can see 74 is where the lower first is. Basis span is now around 82,300 or so. It's going to continue to head down, probably towards the 80K region. Of course, we know that that's right around where the weekly bias was for the current trend. And in this case, it can mean revert and bounce. What you want to see right now, based on where the last lower high is, the last technical lower high here is at 90,500 or so. And that's right where the current upper first standard deviation of the Bollinger Bands is. And, we can see like incredible mean reversion, but realistically, what you're looking for, if this is going to maintain being a low and not just keep trending down for continuation, what you'd be looking for is, something like this that changes structure, right? You're looking for another lower high that's a little bit more local. Maybe it's at 74, maybe it's a little bit further up. Who really cares? But then you're looking at a higher low or equal low as it relates to this current low at 60K, and then break the downtrend. Even then, though, it doesn't do too much on the longer term time frames, but that's where you'd be looking for the trend reversal setup. The other option is it bounces and then gets continuation down with the current trend, or it just, from this close open just heads down, right? So that's kind of the main three options here. And the easiest way to figure that out is, if we're passing the low at 60K, then we're seeing lower, right? Bounces up to some of the overhead resistances. 74 to 75 is going to be an area of interest right around that lower first. Anywhere above there, just be aware of, right around $80,000 here, which is the low side swing, all the way up to, mid 80s at that 85 to 86, which is the weekly, right? We've got that 84 to 85, but I would say even 86 is fair game to be looking at, which is going to be right around where we saw the bounces come from over here, and where it tried to hold on to here at this lower low for this daily trend, right at 86. So just be aware of that to the upside. Local structure is going to be the most important, but it is playing the longer term weeklies very nicely. So a few things to note here, and this is going to be primarily Bitcoin focused. We will talk a little bit more about some of the other markets next week, but I will look at them here in just a moment. We can go ahead and talk about that fib that I had on log scale on the monthly. All right, so from the current high of the cycle, which the cycle is complete. There's no arguing it. The cycle is complete. That is a macro top. That doesn't mean that we're going to go into the most brutal of bear markets. Doesn't mean that we won't go into a brutal bear market. But it doesn't mean that we will either, right? It's a macro compression. So until we see expansion on a longer term time frame, like a monthly, it's probably going to be a less brutal or volatile downside targeted bear market. Still within some of the areas that I've talked about, though, right? Like, all of the areas that I just talked about to the downside still viable, and that would still be a less severe, I guess, bear market than in cycles past. But this is a macro top. There's now that structure is broken, it's confirmed. So even if it was to deviate on the monthly, for instance, we got a higher high and it puts in a lower low and then makes higher highs much later on, or even if it was right away, that's still a macro top. That would be very, very significant, right? But even if that were to happen, this is still a macro top now because of the way that structure has played out. Now, granted, you're going to get a lot of people go, oh, what about the close? Well, the close is fine. It would just be, a macro top break. If it were to even, swing all the way back up and close green, you still have that swing down here. And then, that would be still a macro top. And I do, like I said, maintain that I think it's going to take a little while, but I think it's very interesting where the fibs fall. And especially when looking at the weekly. So the weekly structure, we've got the 618 on a log scale fib right at $56,000. And then, of course, we have a 50% right at that 44. And just to kind of really stress this point is when looking at where the 50% is, that's also where the 100 period moving average is. It's right around that 44 to 46 area. If you're looking at index here on Coinbase, it's a little shorter because of the history, but it's 44 to 46. It's also confluent on both charts, whether it's index or one of the exchanges. that has more history is going to be around that 44,000, which of course is where we saw the weekly area get a rejection on the way up, couldn't close above it, right? So from the weekly standpoint, it rejected here, and that was one of the areas that it had to pass through for the weekly. And when looking at kind of how things played out, right to the broke through the 618 retest, and of course this is 61.8% of the entire move from the low to the current macro high. So, we're going to have confluence on fibs for retracement, and you can invert them. Doesn't matter if you want to invert them with the 0 up top or the 1 up top. It really doesn't matter. You just flip it. And this would be a 382 at the 618 here. Of course, 50 remains the same. And then this would be a 618 down here, which is down in the $34,000 to $35,000 level, which when looking at the prior cycle is, right around where this higher low on the monthly came in at $35,060. So, but it is interesting that we're getting some confluence, and that's really what you're looking for, is confluent areas that show up over and over and over again, because that's where you're going to see the order book stack up on the way down and the way back up in this case, right? 80,500, 786 up here. I want you to make note of where the weekly tapped on the way down, right? Bounced off of the 786, 80,500. Lower high didn't quite make it to the $99,000 to $100,000 area, which was this higher low over here, 98 to 101, right around that 888. And then it was, all down from there after it lost 786. Does that mean that it's destined to hit the 618 exactly? Not necessarily, but but that's definitely where I'd be looking, somewhere in that area down there for continuation initially, and then anywhere below there, like I said, 48 to 55 is one of the key areas. Start losing that, it's that mid 40s to 38,000 are going to be fair game. Not too much really to say other than what you should be doing is picking the levels that you would like to stack at. And this is where I kind of want to have a little bit of a conversation about this. You should be laddering in if you are going to be stacking for the long term. It doesn't matter where you start laddering, but you ladder and your orders get bigger, the further price goes down. And then the question always is, well, what if this ends up being the low and it trend breaks back to the upside? And then I missed it and none of my orders down here get hit. Well, then you slide it up to wherever you see a higher low come in, right, for a potential, trend reversal setup, and you stack at that higher low down to the equal low. And that would be just the other way around, right? Otherwise you look for, the potential for lower highs and lower lows, and you ladder in, whether you got in here or you plan on getting in lower, or say you get in right here right now, you ladder your orders in, and they get bigger the further price falls, right? And that's going to be personal to you and your risk profile. So if it, let's say you laddered and you got a little bit here, you ladder a little bit here, you ladder a little bit here, right? Maybe you ladder a little bit lower, whatever you want to do, that's up to you. And then the orders should be, getting bigger. So your first order would be the smallest, in this case, and then you would, your orders just get larger the lower price gets. And then you can DCA your way into a macro low for continuation. If that doesn't occur, all you do is you take this and you slide it up with the trend. So you get in there, say you got in here and it puts in a higher low, then this order would be here. And then you work you work the other way, just sliding in, because you want to get in on the low side. You don't want to FOMO into highs. That's going to be personal to you and your plan and how you look to accumulate. Not financial advice, of course, but that's what you want to do. And if you're in this game and you're way underwater, you should be considering where you want to get in and ladder in, right? Now, if you don't have a plan, you should be making one now. So let's just touch on some other markets here for just a moment. Commodities, gold. It's ugly. It's continuation above 5,600 to the upside, and continuation to the downside below 44. Right, then we're looking to 42.75, and then it's down to essentially 4K to 41.60 here, and then we can start entertaining that low to that 272 there. So that's kind of where I'd be looking on gold. This is a consolidation, so now we do have consolidation structure going on. So we have the lower low swing as it compares to this swing over here. Even took this higher low swing out, or just settled on it at 4,400. Got a lower high confirmed, and then it's sideways, right? So now we went from expansion. We're starting to get into a range. So back above 51.31. Then we're going to start looking up to the 52 to 54 level, and then possibly back up to the 55 for resolution to the upside or a test of the highs, depending on if it closes above 56. If we see it starting to resolve to the downside below that 4,300 level, then we're looking for, 42.75, 100 EMA, anywhere below there, we're looking for breakdown to 4K, the 4K to essentially 41.60 here, as the EMA on the daily will start sliding up when this opens back up. Silver. This is lower high, lower low structure, so a different look than gold. But this is going to set up for a range, essentially back above the basis at around 92, which is where the lower high came in. Then we can entertain moves to 95 and then 98 to 100 up here, and anywhere above there, then it's back to the highs, 115 to right around 120 or so. Resolution would be looking up towards 130 now. Anywhere below the low here at the mid 60s, which we talked about, that's where we would start to look for a move back to 55 and potentially even 50 down there. Traditional markets recovered pretty well. We had a brand new all-time high on Dow. And, I think Dow is a little bit more reflective of kind of Main Street in many cases for what Dow what Dow indexes. So nice sweep of the highs. We had a break of the lower highs over here, higher low, brand new all-time highs. We've now cracked up to the $50,000 50,000 point and above, sorry. And realistically, 50, what did we end up getting as a high? 50,169. Nice. 50,200 to 300 next, and possibly more up to 55 to 56 up here. And that's kind of from local structure, probably from this consolidation. Yeah. Yep. Above like 50,300, 400. We're looking 50,005 to 6. Yep. So 50,400 being like a key maybe stopping point, but this is compression into expansion. If it gets continuation, we're looking 50,000, 400 to 500 pretty quickly, I bet. And then above there, we can start looking 50,600 to 50,850 up there by the 2 spot for a local expansion. And it just needs to hold. Guess what? This higher low swing right here at 48,830. And that's pretty simple. NASDAQ is looking a lot different as is SPY. So we have the higher high to lower low. So this needs to work its way out of this particular structure, specifically by getting above 25,840. We did dip into our zone down here. So we were looking at, breaks below, around 25,000 to head towards the mid to low 24s. We did get that 24,455. Nice rally to set that lower low, but it's rejecting in the lower term timeframes off the lower first. Back above 25.5, then we can start entertaining trips to 25.8 to 9, and then eventually 26,000 to try and head up and take out this higher high. If we do see continuation below 24.5, pay very close attention to the close right here at the low 24,240. If that's dropped, we're likely going to be running 24,000 and under down to this swing somewhere around that 200 period moving average, right around 24, to this 200 EMA and 200 SMA to the upper 23s, 23.8 to 23.9 would be fair game on continuation to the downside. SPY, it actually stayed locally. It swung the low over here at 675, right at the lower third, got its its lower low with a bit of a higher or equal low close. Now it's all about, can it take out 697, 698 region, go for that 700 to 705 up here on initial expansion, then probably look in 710 from there. I'd take it 5 points at a time. If we do see continuation below the 675, I'd be looking, right around, I'd be looking right around 670 right here. Anywhere below there, mid 660s, so 665, and then down to 660 on the low side here. If it starts to break down into this structure here, we're looking 650 probably pretty quickly with an expansion. Dow is telling us, like, hey, follow me if you can. So I would just give, next week a chance for both NASDAQ and SPY. I know it got pretty ugly on NASDAQ, but the buyback is pretty legit on some things. And still, quite honestly, there's nothing in longer term timeframes wrong just yet. Many are probably going to be looking at this as like potentially rolling over. I really only see that for NASDAQ, especially on closes below 24K and losing this swing low and the upper 23s at 23,854. That's where I'd be looking at that as viable. This has been a long one, but I think that it's important to clear up a few things, have a good conversation about Bitcoin. I know they've been longer videos this week, but I hope that I hope that this helps and you are starting to understand what the thesis is. $98,000 on the weekly. Anything below there on the weekly, it's going to be a lower high, come back and retest the lows, or it's going to be continuation from here. All right. That's going to be it for today. I hope you all have a wonderful weekend. I hope that you if you didn't already have a plan, you make a plan. And if you have a plan, stick to your plan. This is a buyer's market, meaning that it favors the buyers buying in the downtrends, right? So just be logical. If you're not an active trader like myself and others, don't worry about it. Pick your spots, get your fills, sit, wait, be patient, and be happy. Because many last cycle were like, oh crap, I should have bought 60,000 or 50,000 or whatever those numbers are. When we were up towards the highs over $100,000. Well, people that weren't complaining were the ones that were averaging in, DCAing, and trading during the bear. So you should be doing the same. Don't be afraid of it. We're moving forward in this industry, not backwards. So, all right, have a wonderful weekend. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And, of course, as always, stay safe. With all of that being said, Landy out. Take care.